Good morning and welcome to IG's early morning call on Friday, the 22nd of September. I'm Angela Barnes. Coming up on today's programme, global indices drop after numerous central bank decisions this week, including from the Federal Reserve and Bank of England. The S&P 500 and Germany's DAX both hit a 3-month low. Also, the yen is down as the Bank of Japan leaves monetary policy unchanged, whilst the consumer price index remains above the Bank of Japan's target for a 17th month. And for UK consumers, GfK consumer confidence unexpectedly rose as retail sales also go up, but lower than expected. Well, let's take a look at volatility this morning, because obviously with all those central bank decisions, we've seen quite a bit of movement here. So if we look at the VIX, you can see volatility is much higher since the US Federal Reserve's rate decision on Wednesday night when it left those rates unchanged. However, it did indicate one more hike before the year end. And there's been a host of central bank decisions as well this week impacting the markets. The VIX is currently up to about 1740 today. On Wednesday, pre-rate decision, it was around 1549. And if we look at this 1-week chart, it has gained nearly 17% since last Friday. But it comes as well as US stocks closed Thursday with losses. The 10-year US Treasury yield rose 0.7%, while the dollar index shed 0.23%. While all 11 sectors in the S&P finished lower, with real estate leading losses. Big tech also finished lower. So, with 30 minutes to go until the European markets open, let's have a look at how things are looking across Europe. So let's start with the FTSE. So it's poised to open flat, marginally low, 0.1%. As well, France's CAC 40 poised to open lower, 0.32% down. Germany DAX lower 0.27%, all session stock on the IG platform. And this is as well as investors also digest the latest interest rate decision from the Bank of England yesterday. But the FTSE there appears to be in the strongest shape. What about Asia overnight? Well, the markets slid as well as the Bank of Japan left its monetary policy unchanged after its latest meeting concluded. So the Nikkei 225 was down 0.46%, but Hong Kong's Hang Seng up 1.03%, and Australia's ASX 200, the S&P, down marginally 0.09%. And now let's move on to Wall Street and have a look at how US stocks ended the session. But firstly, the global stocks, I should say, were hit by the Fed's hawkish stance as government bonds yields surged, pressing on equity valuations. But Wall Street did tumble amid the risk-off market sentiment. So the sell-off, particularly in growth stocks. So the Dow Jones Industrial Average was down 1.08%, the S&P 500 down 1.64%, and the Nasdaq, the tech-heavy Nasdaq composite, was down nearly 2%, 1.82% to be exact. Well, the Nasdaq, from a technical perspective, interestingly, the index is seeing a potential head and shoulder top pattern indicating increasing selling pressure could be ahead. So we are keeping across that. And as I said, all 11 sectors in the S&P 500 finished lower, with real estate among the loss leaders. All big techs stocks finished lower too. Amazon down 4.4%, Nvidia nearly 3%, and Tesla also shed 2.6%. FedEx, who had its earnings out yesterday, was the only stock that finished in the green following positive earnings results, up 5%. However, its stock did also pull back later in the session. So let's have a look at how Wall Street is poised to open today. So again, all session stock on the IG platform. So let's take a look. The S&P 500 set for a slightly higher open today, 0.23%. The tech-heavy Nasdaq also poised to open higher, is up 0.34%. And the Dow Jones also up nearly 20%. So we'll be keeping an eye on that. And of course, Angeline Ong in our Beat the Street show this afternoon will be well across all of that for you. So make sure you do tune in for that. But let's move on now as well, because there's been a lot happening with the Bank of Japan too. So as we were saying at the beginning of the show, the yen has weakened in the last few hours as the Bank of Japan maintained ultra low interest rates. So the key short-term interest rate remained at minus 0.1%, and for the 10-year bond yield around 0%. Well, the Bank of Japan also left unchanged its 50 basis point allowance set either side of the yield target. No change in its forward guidance either, when some had expected a more neutral tone in its statement. But the Bank of Japan reiterated that if needed, it would take additional easing measures without hesitation. So let's just have a look at the US dollar Japanese yen chart, because the recovery has gathered steam on the Bank of Japan's policy announcements. The pair is currently trading at 14806 roughly, sorry, 14816 now, up about 0.39% on the day, having jumped to 148.18 in the knee-jerk reaction to the Bank of Japan decision. Well, Japan's finance minister said this morning that he's watching currencies closely with a high sense of urgency. At 148, the yen is well in intervention territory. Japan's government intervened, if you'll remember, in September 2022, when the yen hit 145, and a second time as well, when the US dollar Japanese yen rose to 151. Well, before the Bank of Japan decision, latest inflation data was also released, and data that remained broadly unchanged in August. Well, only headline CPI growth slowed to 3.2% year over year from 3.3% the previous month, while core CPI, which excludes food prices, remained at 3.1%. Excluding food and energy, the measure favoured by the Bank of England CPI growth remained at 4.3% in August year over year. Well, let's move on now to the UK, because there's some data out, and GfK consumer confidence rose, it seems, for a second straight month. Well, the index was at minus 21 in September, the highest since January last year, from minus 25 in August. Economists polled by Reuters had forecast a fall to minus 27. It, however, remains well below its average of minus 10 for the survey, which has been running since 1974. Well, about half an hour ago, retail sales also came out, and retail sales rose by 0.4% in September month over month, but that was lower than the 0.5% anticipated. Well, moving on as well, staying in the UK, because throughout this morning, the manufacturing and services PMI data will be released in the UK, but also in the Eurozone, and later this afternoon in the US too. Not much change expected though. European and UK indicators are all expected to remain below 50 in contraction territory. Only US services PMI is anticipated at 50.6 for September. Now, what's happening on the corporate front? Let's take a look at Ocado shares this morning. Well, look out for them, because yesterday the stock dropped for a 3-month low, losing 20% of its value. So let's just pull up the Ocado chart here. Well, interestingly, so this followed a recommendation downgrade by Exane BNP. The online supermarket was cut to underperform from neutral. Exane BNP citing concerns over subdued growth in Ocado's retail business. Well, 20% seems a lot for a downgrade, but if we look at the chart, Ocado shares are still up 80% since early June. Between early June and the end of July alone, the stock jumped nearly 200%. Well, in other news, Rupert Murdoch has stepped down as the chairman of Fox and News Corp, and he's going to be handing the reins over to his son, Lachlan. Well, the 92-year-old informed colleagues in a letter on Thursday of his decision, noting that he was in good health. He will officially make the transition in November, and his son Lachlan will become the sole chairman of both companies. Now, Chevron, the US energy giant, and unions have struck a deal. And this is to end strikes at two large liquefied natural gas facilities in Australia. Now, workers have accepted a proposed agreement put forward by the country's labour regulator, and that's according to the Offshore Alliance. But the industrial action has been taking place at the Gorgon and Wheatstone facilities over paying conditions since the 8th of February. And the two plants in Western Australia account for more than 5% of global LNG capacity. And the dispute triggered volatile trading in LNG markets over concerns that the walkouts could have an impact on global gas supplies. Well, let's just have a look at the Chevron price chart because it's an all-session stock on the IG platform. It's down 0.77% this morning, but its share price has fallen nearly 2% since the strikes began on the 8th of September. Well, let's go to commodities now, and let's just take a look at how Brent and US crude, or otherwise known as WTI, are performing this morning. Firstly, let's start with the US crude chart. So prices back up today after seeing a dip yesterday, now up 0.48% for US crude, trading around $92 a barrel. And let's just, sorry, that's Brent, the Brent chart. So Brent's at $92 a barrel, up 0.47%. And US crude is also up 0.64%, trading around $90 a barrel. Now, last Friday, for oil, we had the first sizable Baker Hughes rig count rise in quite a while. The number of total rigs in operation rose by 9 to 641. To get an increase of more than 1, we need to look back to early July. And to get a rise of 9, we have to go back to November 2022, a rise mostly down to gas rigs in operation. The number of functioning oil rigs rose only by 2. Well, before we go as well, let's have a quick look at how gold is doing this morning. The considered safe haven asset in times of uncertainty. Well, it's up 0.26% today. The Fed's hawkish hold didn't prove too popular with gold bulls either, though. Gold rallied towards 1950 in the run-up to the decision, in line with the highs from early this month, before giving all of the day's pre-release gains back and ending in the red. But as I said, trading a little higher today, up to around the 1924 mark. Well, that's all we've got time for with our early morning call, but do tune in for our look ahead show this afternoon and Beat the Street with IG's Angeline Ong. Thank you for watching.